Welcome to this month's tax topic. Today we have a guest speaker, Clarence from OTA Tax Pros, who will be discussing the premium tax credit, which is a tax credit created by the Affordable Care Act. So for anyone receiving insurance from the marketplace, this is an important topic to understand. As always, this webinar is for educational purposes and does not constitute advice. We recommend all students discuss their individual tax situation with us by scheduling a consultation. Our expert today is Clarence Chern. Clarence has over 30 years experience in tax preparation and is a small business owner. Along with a bachelor's in business, he's a specialist in trader tax laws, special small businesses, multi-state taxation, and employee benefits. I really enjoy working with Clarence here, and he's a gifted accountant here who puts his clients first.
Thanks, Thomas. Many people now know that it's required to have medical insurance for all members of their families. But if you have not been to the marketplace, you might not know that you could possibly get a prepaid credit. Probably don't know how the credit works. By the end of this session, you will know what the credit is and how to apply for it. You will also know if you qualify and the possible pitfalls for not understanding how this credit works. So, what is the premium tax credit, you ask? It's a refundable credit that is used to help individuals and families with low or moderate incomes who do not already have some type of insurance offset their out-of-pocket premiums. If you have a company-sponsored or government-sponsored insurance, you do not qualify for this credit. You might have heard people talking about the marketplace and wondered what they were talking about. Marketplace is a place where you can find information regarding affordable health care. That will help you figure out your credit, and you can actually purchase insurance. Just like an employee-sponsored insurance, the marketplace has enrollment periods, and just like employer-sponsored insurance, you need to contact them if you have a life-changing event, such as a marriage, divorce, birth of a child, or if a child goes out on their own. So, who is eligible? Individuals and families whose prior year's income falls between 100 and 400% of the federal poverty line for their family size. The tax statuses include single, married filing joint, or head of household. In extreme circumstances, a person filing and married filing separate could also qualify. You can also be eligible if your employer does not have a health plan or if the insurance offered by your employer is not affordable. If you have a government-sponsored insurance, you are not eligible, and you must pay for the premiums in order to qualify for the plan. How do you get the refundable credits, you might ask? In order to take advantage of the advanced tax credits, you'll have to go to the marketplace and apply for insurance coverage. You'll have to provide the necessary documents so that the marketplace can properly estimate the credits that will be paid on your behalf during the coverage year. Armed with this amount, you will choose an insurance that works for you and your family. If the credit covers the whole amount of the premiums, you will not have a monthly premium. However, if there is a shortfall, you will have to pay the shortfall premium. You also have the option to use all, some, or none of the credit to offset the out-of-pocket premiums. So, how do you get the refundable credit, you might ask? Just like you receive a W-2 sometimes in late January or February, you will receive a Form 1095-B during that time frame. Your accountant will need to reconcile the difference between the credits paid on your behalf and the actual amounts of the credit that you may claim on your return. Make sure you provide your tax professional a copy of the Form 1095, and to avoid getting a letter from the IRS, make sure you use a trusted tax professional. These credits can be kind of tricky if the professional doesn't know what they're doing, so you want to make sure that they understand how the credit works and how to apply the credits properly. If there's an overpayment of the credits, you might be required to pay back the overpayments, and by the same token, if you do not use all the credits that you were allowed, you could possibly get a refund for those unused credits. You should keep the marketplace informed of household changes in order to avoid having a tax liability. You probably want to inform the marketplace if you get a raise, promotion, or bonus, or if you have a reduction in pay. If you have a second job, if you make more money from self-employment, if your spouse makes more money, or if your dependent gets a job, or any other income increasing or decreasing events, you let the marketplace know so that they can adjust the premium or the credit accordingly. Uh, Make sure that you talk to a trusted tax professional on this topic. If you have any more questions on this topic, please make sure you talk to your trusted tax professional.
Wow, awesome. Thank you, Clarence. Obviously, the Affordable Care Act created a lot of changes, and this certainly is not among the easiest to understand. So, discuss with us about your individual tax situation. We'd love to help you put together a tax strategy, and we look forward to working with you.